Here, 21 now before 9, and it's time to check in on your money and find out what's going on Wall Street this morning. We got all kinds of good junk going on. The Chinese are growing like weeds. We're not slowing down as much as we expected to on building houses, and, well, hot diggity, we're all employed. Let's check in with Phillip Statler and see what's going on with him this morning from Statler Financial Services. Phillip, how are you today?
Hey, good morning, Dave. Hopefully I sound a little better today. I got technology back up and running the way it's supposed to. So that's we're thankful for that for sure.
Absolutely, and I'm awful happy to hear you this morning. Just to set the table this morning, yesterday wasn't too bad. The Dow was up 100 points, Standard & Poor's up 13.5, NASDAQ up by 34, and the Russell was up by over a full percent, almost 1.25%, up 21.68. On balance, I call that a pretty wall-to-wall good day on Wall Street, wouldn't you?
I think so. I mean, I think for a Monday, especially coming off of, last week was pretty much an up week, but we did have some volatility there that played its role. But so it was good to see it rise. And the question is, again, during earnings season, can we continue to kind of follow through with that?
Yeah, the banks have provided with some, well, I call it interesting entertainment this week at the very least. When we get to the reports from Goldman Sachs, we'll mention this in detail. But one of the reports I was reading is that the major banks and a lot of the ones that are based on consumer savings heavily, they've been saying they're seeing an awful lot of outflow because Apple and Goldman Sachs have gotten together to do a high-yield savings account that, what are they saying? It yields 4.5%, something like that?
Not quite, 4.15.
Wow.
4.15.
Given the fact that,
yep, and you got to have an Apple card.
Given the fact that my little put and take savings account in one of the other banks, I think I looked at when I saw my interest come up on my cell phone. I'm getting like 0.015% or something. It's mostly just a cushion account anyway, but compared to passbook savings, that sounds earth-shaking, doesn't it?
Yeah, it really does. And so that's probably the highest savings account rate I've seen. Now you can get some CD rates up that high, but as far as savings, just a blanket savings account, that's the highest rate I've seen out there.
That's borderline, and it's causing some measurable outflows on the other banks as folks pull their money out. Other economic news that comes out this morning. One thing happened overnight. It evidently made our markets happy. Looking at what happened to the futures markets about 3 this morning. Chinese gross domestic product. Now, you and I both look at China's government reports and say, yeah, right. But their report anyway was that the gross domestic product in mainland China grew by 4.5% last quarter, which is kind of good news for the market as a whole, because even if it's not true, the Chinese government will make sure it is true no matter how much money they have to pump in to make it happen, right?
That's right. Even if it's not true, they'll make it true one way or another.
Yes, it's a government mandate. On our side of the pond, slightly more believable numbers come out of the government this morning, and it's one of our favorite industries to watch because it's such a bellwether. Building permits and housing starts. Reports for March, building permits, they were expecting a 6.5% decline. We got an 8.8% decline in building permits. However, they were expecting a 3.5% drop in housing starts, where they actually start spending money to make that building permit happen. And the decline was only 0.8%. On balance, I'm going to consider that relatively good news because the actual part where the money gets thrown around is nowhere near as bad as they thought.
Well, that's true. And looking back at yesterday, the home builder confidence index actually came in as expected and was up just a little bit from 44 to 45. So that you add that with the other stuff you're seeing here, it's a slowdown, obviously, but still the optimism seems to be there with the home builders.
Mm-hmm. And anecdotally, locally at the very least, some of the guys that work in real estate around town have been telling me they're seeing a slight rebound in terms of resale prices of homes too. We may have just flattened out enough to be able to maybe plateau on the level that we're at, because the declines in the national market slowing down a little bit less than expected, and at least resale prices in our local market, at the very least, not continuing to fall. They're flattening off and maybe and occasionally improving a little bit in some sectors of the housing market. I hate to say it, But it's starting to sound like a soft landing could actually happen if things keep the same tack we're on now.
Well, yeah, but we're still early in the year, Dave. I hate to be a pessimist, and I'm not. I think though ultimately we'll get through it, but there's still a lot of year left, and we still haven't seen the full effect of that over 1.5–2% increase in interest rates that happened last year.
Yeah, I know, but I'm just playing my role as the starry-eyed optimist to your cynic. That's Hey, speaking of starry-eyed optimists, the report that I found yesterday afternoon that I printed out, they printed out a list of the metro areas nationwide with the area by area unemployment rate. 4 of the 5 lowest unemployment rates in the whole doggone nation are here in Florida. Now that's kind of an indication that we had a pretty good tourist season this year, I suspect.
Well, I think we did, and you're getting more and more people moving here and staying, and so more people come. If they're retired, then you've got to have more people to service those people, so that's going to keep your unemployment rate relatively low.
Absolutely. We're not a big manufacturing state here. We're a service-driven economy. So, no, it doesn't mean we've got a lot of $50 an hour manufacturing jobs available, but we are finding jobs. And like I said, 4 of the 5 lowest unemployment metros in the country being in Florida. I got to believe that Ron DeSantis is going to use that figure somewhere in his campaign, isn't he?
Yeah, I would think so. Definitely. That's good
if I
for
were
us.
in his shoes, if I were in his shoes, I certainly would. Looking at the earnings season continues. We're not into the meat of it yet, but we're getting some of the early ones. And the financials were interesting so far, and we got another big one today. The people that partner up with Apple for that ridiculously high savings account, Goldman Sachs. How did they end up doing?
The Goldman Sachs came in with some mixed results, really. They came in with their revenue well below expectations, like $500 million less in revenue that was expected. They also had a little less commodities trading revenue than expected, so they're not really doing well this morning. Their actual earnings came in ahead of expected. By about 69 cents. They came in at 8.79 versus 8.10. But again, not revenue is what people are looking at there, not what everybody wanted to see. They're down a little over 3.8% this morning.
Ooh, they're kind of the golden boys of Wall Street too. When they miss, folks respond, don't they?
Well, they do. I mean, there were some expectations there, and they didn't come close. So that's gonna hit them in the kneecaps. The other one, we had 2 other banks that reported today. We had Bank of America. They reported as well. They beat on top and bottom line. Their interest income increased by 25%. So that was some good news for them. And they're trading up about 1.3% right now. The other bank that we had report was Bank of New York Mellon. And so they missed on revenue as well as just like Goldman did. And but they did obviously come in with earnings that hit expectations. So they're down about 0.5% right now.
Okay, a little bit of sector woes from Goldman Sachs, I'd imagine, weighing down an otherwise decent report, right?
Well, yeah, except for they missed on revenue as well.
Oh, okay. I missed that part. Okay.
Yeah.
Over on the consumer side of the fence, we had an interesting report from Johnson & Johnson. I just saw the headline go across. How are they accounting for that talcum powder settlement? They aren't writing it all off on one quarter or anything, are they?
Well, I'm sure for their financials, they probably are. Taking a hit, but nothing in the report really even talks about the settlement that I see here. So I'm not sure exactly how they're going to report that, but it's always considered an extraordinary item, so it doesn't get figured into their normal operating income and expenses. But so Johnson & Johnson, get this, man, they beat on revenue by over $1 billion. That's a B, Dave, $1 billion, over $1 billion. They beat in revenue than expected. Earnings came in a little bit better than expected, minus X items, meaning less that settlement that they had with the courts. But they beat by about 18 cents a share, came in at 268. And so, with all of that said, they're bumped up about 1.2% this morning.
That's a pretty nice number to make, especially when you've got something at extraordinary expenses hiding in the background, right?
Yeah, with all that stuff going on for them, I mean, that's really a pretty good number for them to hit. The
Absolutely.
other, we had Lockheed Martin also reported, and they basically came in expected for the year, and so they're up about 2.1% this morning.
Not bad. We're going to start getting some really interesting names coming in as well. Starting this evening, Netflix reports after the market closes. Tomorrow, we're going to hear from Morgan Stanley, from Tesla, IBM, and a whole pile more. So the meat of earnings season is upon us, and so far, we haven't had any major disasters, have we?
No, I would say the closest disaster we've seen maybe right now is Goldman, and that's not really a disaster, but a significant miss
Yeah, significant
on
miss is
revenue.
different. Yeah. We'll take it happily. Resetting the table. Generally an update yesterday on Wall Street. The only index I see in red is the one we'd like it to be, and that was the VIX. It was down 45 minutes before we opened this morning. What are we looking at?
Things are kind of sliding down a little bit. The Dow is at a little less than 0.1% right now, and it was double that earlier. The S&P 500 is up about 0.5%, and the Nasdaq 100 is up 0.8%. You mentioned earlier the Russell 2000. It's up about a little over 0.5% right now. On the other side of the coin, we got silver up 0.4 and gold up 0.4 as well. Crude oil is heading down by about 0.7, down to $80.28, Dave. And I hope it keeps going because, man, I saw the gas prices this morning, and $3.75 was the gas price I saw coming to work this morning.
Yeah, one of my news tickers said 20-cent increase in the last week or week and a half. That's almost scary, isn't it?
Man, that I'm gonna tell you, just from what I filled up yesterday or Sunday, I filled up Sunday at $3.34 a gallon.
It's more than 20 cents.
Yeah, exactly.
Wow.
That's what I'm thinking.
Absolutely. Overseas markets, it was a mixed bag in Asia. The Chinese markets reacted kind of interesting to the Chinese GDP report. The Hong Kong market fell by 0.6%. The Shanghai Composite was up by a little. Japan was up considerably, so it was a mixed bag in the Asian rim. European markets generally up fractionally halfway through their trading day this morning. Want to find out what to do about a retirement that you can count on? That takes planning from an expert. How do I get a hold of you to get that plan going, Phillip?
Dave, they can give us a call at 863-382-0037. And we'll walk you through our core retirement design. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow morning about the same time on Light. Phillip, thank you so much. You have a good day.
All right, man. You too.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler. Remember that.
Hey, folks, again, I want to thank you for joining us today. Have a great day. Join us again tomorrow, same time, same place. Until then, so long.